Hey everyone, this is Scott with my first ever YouTube video where this channel is going to be all about helping you to learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And in today's video, I'll be talking about the 3 major things that I learned while trading options in 2020. And before we get started here, given that this is my first YouTube video, I'll give you guys just a brief background into who I am. As I said, my name is Scott Reese. I currently have 2 occupations. I currently work full-time in my day job as a software engineer in the financial services industry, and I'm also on the side an options trader. While I'm writing code for my day job, I have my personal laptop pulled up next to me, and I'm trading options simultaneously. And just to give you some context around my basic strategy, I'll make tons of videos explaining how this works and what I do going forward in the future, but my strategy is all around selling options. I'm a probability-based trader, and selling options specifically is how you quite literally play the odds in the stock market. And even though I'm very confident in what I do, I've spent a lot of time teaching myself and learning the proper way to trade and invest in the stock market, I'm always still trying to learn more and trying to improve my strategy going forward. And that's something I'll likely be doing throughout the entirety of my career, trading options and investing in the market. And 2020 was definitely a great learning experience because the market pretty much did everything it could do, which it normally would do in a 5 or 10 year period, all condensed into one single year. And so if you are a new trader, this past year was an excellent learning experience to see all the ups and downs and the panic and the euphoria that the market can go through over a usually longer period of time. And so given the chaos that occurred in the market in 2020, there were definitely some very key things that I learned while trading options throughout all of that chaos. And so now getting into it here, the first major thing that I learned while trading options is how crucially important it is to stay small. And by small, I'm referring to your individual position sizing, the amount of capital that you allocate for a single position. That amount of capital relative to your entire account value must be small. My general rule of thumb is to not allocate more than 5% of my total capital for one individual trade. Generally speaking, I stick between 1 and 2%, sometimes 3% if the opportunity is really advantageous, but generally speaking, I do not go over 5%. So for example, if you had a $10,000 trading account, 5% of that would be $500. So that would be my personal maximum amount of money that I'd be willing to put up to hold one individual position. And the reason for this is because the market can move, as we saw in 2020, extremely quickly and with great magnitude. Right? If you recall from back in February and March of last year, the stock market literally crashed by over 30% in a matter of a few weeks. That was one of the quickest and most rapid downfalls in the market in history. And then right after that, we had one of the quickest recoveries, one of the fastest rebounds in history. And I can definitely tell you from experience, having traded through that, I definitely had some losing positions, right? But because I stayed small to begin with, because I only ever allocated 1, 2, or 3% of my capital for each trade, I was able to survive those huge swings in the market. And more specifically, the main reason why I was able to survive through all those chaotic movements, given that I was staying very small on my individual trades, I could continue to hold on to them. And I could make adjustments and I could manage them so that eventually the stocks that I was trading options on would eventually come back around. And that would not have been possible if my position sizes were much larger, right? For example, back in February and March of 2020 when the market crashed by over 30%, I racked up some pretty big losses during that time. But because I was able to continually hold and adjust those positions, when the market did rebound, I was able to make back a lot of those losses and move forward. And I know it's certainly enticing to bet big and try to go for the huge profits, but what comes with that more often than not is also huge losses that you cannot actually come back from. But when you stay small, even in very bad situations, when you do have pretty significant losses, they're not going to take you out of the game. You'll be able to rebound and survive and recuperate a lot of those losses only if your individual position size are small enough. And so then moving on, the second major thing that I learned while trading options in 2020 is that neither myself nor you or even the so-called experts have any idea where the market's going to go or what it's going to do, right? Nobody predicted a global pandemic to occur that would cause the markets to go into a free fall, one of the fastest downturns we've ever seen in the history of the market. And then practically nobody predicted a swift rebound and recovery, making new all-time highs throughout the rest of the year. No one predicted that. Now, when I say that, I am speaking generally. There's always going to be a few people who say they quote unquote called it in terms of, oh, I predicted the market crash, I predicted recovery, and I made money off that. To those people, I congratulate you. That's an awesome thing. But I challenge you also to continue making those big market predictions, and you will very likely see that as you continue to do that, you'll be proven wrong time and time again. And that's because the market really is a random system. It's not perfect. It does not model exactly a perfectly random system, but it is very close. And I do have Skillshare courses. I'll talk about my Skillshare stuff at the end of this video that prove this. The market really is a random system. Predicting where stocks are going to go in the short term is pretty much a matter of flipping a coin. Now, in the very long term, 10, 20, 30 years, it's fairly certain that the market's going to continue climbing higher. That's what it's been doing since the inception of the stock market. But in the short term, over a few days, weeks, months, up to a year or more, the market really is random. And in a random system, no one can legitimately, consistently make accurate predictions. Do you know anybody who can actually predict the flip of a coin? No, it's impossible because it's random. Or same thing when you roll a pair of dice, right? Is there any way to accurately and consistently predict which numbers come up top when you roll a pair of dice? Of course not. It's a totally random thing. And stock price movement and direction is not that dissimilar from rolling a pair of dice or flipping a coin. And so as a result of this is why I prefer to keep my entire portfolio very neutral relative to the market. With the way that I trade options, I can make money whether stocks go up, down, or sideways. To a limit, of course. The stock market can't crash by 30% or explode by 50%. There are limits to that, but generally speaking, that's what I do in managing my portfolio. So when I do make trades that are directional, when I make a trade that would profit if the stock went up in price, or if I made a trade that would profit when the stock went down in price, I only make those kinds of trades to maintain balance in my overall portfolio, to keep things mostly neutral. Because I can say from experience, I've definitely tried to predict where stocks are going to go. I look at a particular chart and I think, wow, this looks really bullish to me or bearish. I make a trade based on that, and about half the time I'm usually wrong. Now, that being said, with the way that I trade options, specifically selling them, even when you are wrong in stock direction, you can still actually make a profit. And that's one of the really cool things that comes with selling options as opposed to buying them. And lastly, before moving on to my final point in this video, this is yet another reason why it's so crucial to stay small in terms of your individual position size. Because you may look at a chart and you may see every possible signal that you could find that would tell you, oh, this is a very bullish setup, and you could still be totally wrong. The stock could tank tomorrow. And if you had a lot of money allocated to that position, right, if your position size was way too big because you were so confident that the stock was going to go up based on all your charting and indicators or whatever, you could have a massive, massive catastrophe in your entire account. So you can definitely try to be a directional trader. I'm not saying it's impossible to have a small edge in trading based on whether stocks go up or down, but it's extremely, extremely difficult. And again, it's tying back to the fact that the stock market is very close to a random system. And to reiterate, that's why when I do get directional, it's solely for the purpose of bringing balance into my portfolio, to keep the entire portfolio as a whole relatively neutral to the market. And so lastly, moving on, the third and final major thing that I really had to learn and work on when trading options in 2020 was my patience. Patience, patience, patience is absolutely paramount for your success as a trader, regardless of the strategy and the product that you are trading. And I'm referring to patience in two main ways. The first of which is patience in finding the right trading setup, right? You might go many days without actually making a new trade because as you're scanning your stock list, you're looking at your charts, you may not find the right setup that meets your own personal criteria for order entry. And you have to be patient through that. And this is particularly an issue amongst brand new traders. Typically they're very excited about getting into trading and they want to be making as many trades as possible. Well, the key thing here is, yes, it is important to be consistently making trades, but you only want to be making high quality trades. And those high quality setups may not come around every day or every week. You have to wait for those opportunities to present themselves. Forcing trades just for the sake of making a new trade is one of the worst things that you can do. And it's definitely a recipe for disaster. So whether you are brand new to trading or you've been doing this for some time, just to reiterate how important it is to slow down, to scan through your lists, to look at your charts, and if you find a setup that does not meet your criteria exactly, don't make the trade. Move on, be patient, and find a new one that does meet your criteria exactly. The more mechanical you can be about your trading, the closer you stick to the pure rules and criteria of your trading system, the more successful you will be. And then the second way I'm referring to patience is patience in waiting to be correct, or waiting to actually take profits on a position, right? Because you may find a great setup that meets all your criteria and it looks great, you want to make the trade, you're feeling very confident about it, and so you place the order, you're in, and then almost immediately, sometimes the trade can go against you. And it can continue to stay against you and get worse and worse and worse until maybe at some point the trade actually comes back around and it's a full winner, or maybe just a scratch or a very small loss. And I can tell you from experience, I've had many trades where the moment I placed the order, the moment I got into that position, I did not see a profitable point in that trade, sometimes for many weeks, 30 days, 45 days in some cases. I had to be patient and wait through all that, make adjustments, see the losses get racked up, only for them to eventually come back down, and the trade actually in the end became a full winner. So even though you might find a great trading strategy, whether you are trading options like myself or stock or whatever, even though you might be very confident in what you're doing, you're not always going to be right. When you are wrong, it's going to hurt sometimes. And in those situations, you need to be patient. You have to stick to your mechanics, and you have to just roll with the punches until eventually that trade becomes a winner, or if it hits your stop loss point and you have to get out, or maybe it just becomes a scratch. But that really is what trading is all about. It's not all fun and games like you might see on social media, where I'm sure you've seen a lot of people claiming to make tons and tons of money super easily, super quickly, all because they just happen to know the secret yet very simple 3-step strategy or whatever. That does not actually exist. That is not real. Trading is a very methodical process that requires a lot of diligence, patience, emotion control, self-control, and most importantly, risk management. Staying small, not going for the moon, not putting on huge positions that could blow you out of the water if something went wrong. Staying small, methodical, patient, and sticking to your mechanics and your plan. And that is what allows you to be successful when trading in the market. And so with that being said, that concludes this video. Now before you leave, however, I do want to say that if you are interested in learning on a very in-depth level how options work, how to trade them the way that I do, how to invest in the stock market, etc., you can check out the courses I have on SKILLSHARE.com. I've got a lot of content already published from this past year that goes through all of that stuff in a very nitty-gritty, detailed kind of fashion. And I have links to a various number of those courses in the description of this video below. Now, one thing to note is if you do want to watch those courses, you will need a premium membership to Skillshare. Now, the good news though is that if you do sign up for that kind of membership through the links I provided in the description of this video, you will get an absolutely free 2-week trial, and you can watch all my content on Skillshare for free. And then after that trial has ended, it's literally going to cost you a few bucks a month to keep that membership going, and you can cancel at any time. So again, if you're interested in learning about options and trading and stock market investing on an in-depth level, please check out those courses. And lastly, if you enjoyed this video, please do subscribe and give this video a thumbs up, as I am obviously trying to grow this channel as big as I can. And given that this is my first ever video, I could use all the help that I can get. So thank you so much for watching, and I'll see you next time.